Hello, my name is Mark R. LePage. I'm the founder of EntreArchitect, an online platform founded in 2012 and dedicated to helping small firm entrepreneur architects build better businesses. Today, I'm going to show you the EntreArchitect Profit Plan Calculator. It's actually module 3.5 from the EntreArchitect Profit Course. And I'm going to show you step-by-step a way for you to calculate your firm's profit, including overhead, including your break even, and including your profit. So at the end of the year, you know your firm's going to be profitable. And before we get started, I just wanted to let you know that the calculator that I'm going to show you in this video is available for free download at entrearchitect.com/profit tools. Profit Tools is a video program with 3 financial management calculators for free. entrearchitect.com/profit tools. You can download all 3 and we'll walk you through each one of them. The profit plan is part of the Profit Tools program, and I'm going to show you that calculator right now. Section 3, Planning for Profit. This is sort of a bonus module, 3.5. In the last few sections, we went through how to develop an annual profit plan, and we went through steps 1 through 4. We did the worksheet and calculated the cost of labor and the total fees billed. And then we calculated the net operating revenue and our expenses and ultimately ended up with our projected profit margin. You have all the spreadsheets that you need to work through those numbers to calculate all of that. But what we did is we put together a calculator that does a bunch of that math for you. You ask the questions, answer the questions, and you plug in the numbers. And the profit plan calculator, based on the P2P financial management system developed by Steve Wintner, Emeritus, AIA Emeritus. We have a calculator that's based on the P2P system in order to do a profit plan using this calculator. So let me pull up the calculator and I'll walk you through it. Okay, so here's what the calculator looks like. The EntreArchitect Profit Plan Calculator, powered by the P2P financial management system for architects developed by Steve Wintner, AIA Emeritus. And it's the same process that we went through with the profit plan that we just walked you through with the spreadsheet, with all the worksheet and the profit plan section. So this calculator is broken up the same way. So this first section is the worksheet. You just answer the questions. You read these questions over here, and you plug in the numbers in the gray fields, and then everything else calculates out automatically for you. And then down here at the bottom, that's the top part is the worksheet, and then the bottom does all of the calculations for the revenue and expenses and miscellaneous expenses, ultimately adding up and creating your profit down here. So let's just walk through this a little bit so you can see how it works. You answer the question, what's the team member's name, right? So you plug in the team members' names. You can also add columns here if you have more than 5 people working for you. If you're a sole practitioner, here's a little tip. If you're a sole practitioner and you're looking at this and saying, well, I have 5 people in my firm, I have 1. I do it all. One of the things you could do is you can use this number, this calculator, and actually even the profit plan. And instead of using it for team members, use it for a role, the role that you play. So maybe you play the role of principal, and then when you do the professional technical work, your role is professional technical, and then you're doing some administrative work, right? And maybe you're charging your clients different rates for the different roles that you're playing. Just a suggestion. So this is absolutely a tool that can work with sole practitioners, and will give you lots of information that you can use to become more profitable. And so your name might be across all 5 of these, right? Might be across all 5 of these, but then, these positions may be the same positions that we show here, but it's just one person doing all of those different positions because all of those positions are being used in your firm, whether you're 1 or 500. So you plug in the position that you have. Then what's the total annual salary projected for this team member? So you plug in the annual salary for each team member. Calculate your total projected labor right here, 304,600. That's a number that we calculated in the worksheet. What are the total number of hours projected for this team member? So if it's full-time, employees work 2,080 hours, 8 hours per day, 5 days per week. times 52 weeks per year. You plug that number in here. This is the contract labor number. So we're estimating that the contract labor is going to work 492 hours. Then that's going to automatically calculate your hourly pay rate, your rate paid. And so it's taking this total labor divided by your total labor hours, giving you a pay rate. It's automatically calculating your average hourly rate, which is always an interesting number. And then you are plugging in your utilization rate. So what is the ratio of chargeable hours worked on projects, which is your direct labor, to total hours worked, your total labor for this team member. So the percentage is determined from your historical data for this team member. So historically, and you're either calculating this specifically from data last year or the year before, or accumulation of those years, calculating a utilization rate. Maybe if you look at these numbers down here, direct labor. So in your historical documents, maybe Maria earned direct labor of 58,000 and indirect labor of 42,000. So you know that Maria's utilization rate is 58%. If you don't know, you can guess. You just plug in a number and see how it works out. And so you plug in your utilization rate for each member of your firm, your direct labor divided by total labor, and then everything else is calculated for you. Once you once you have that hourly rate paid and your utilization rate, we get a bunch of information automatically. So your direct labor is automatically calculated and quantified, totaled up at the side here. Your indirect labor is automatically calculated and adding up to the side. Remember, contract labor, there's no indirect labor in contract labor. Direct labor hours, right? Those are the direct labor hours, calculating right from your utilization rate. And your plan net multipliers also being automatically calculated. So you don't need to do the math to get your multipliers. Your multipliers are being automatically calculated here. The way this works is right over here. This is the calculation that we went through in the worksheet. So it's there. So if you wanted to see it, once you plug in these numbers are going to adjust and give you this plan net multiplier. In this case, the plan net multiplier is 3.13 and is calculated across here automatically, which gives you the calculated billing rate that we talked about in the profit plan. This is the calculated billing rate. And then the adjusted billing rate is a field that you fill in. It's up to you. So adjust your billing rates as desired, round down to enhance competitive edge for low utilization positions, and round up to enhance profitability on high utilization rate positions. And so we're rounding down here, we're rounding up here, we're rounding up here, we're rounding down here, and we are bringing the number down a little bit for our contract labor. You can plug in whatever numbers you want here. If you're calculating a billing rate of 150.24 here and you want to charge 250, you can do that. It's your firm. You can charge whatever you want. And you plug that in and it gives you a projected average adjusted hourly billing rate right here, $108. So that is going to give you automatically a bunch of information over here that then you can work on, because up to this line, this is the worksheet that we went through in previous sections. Now, firm fees billed automatically being calculated from the information up above, and that projected firm fees billed number is being calculated. Percentage of firm fees billed. So this is an interesting number just so you can see the percentage. That's not even something that's in the spreadsheets. This is just calculating the percentage of the total firm fees billed. So you can see who's earning percent in terms of percentage, who's earning what in terms of firm fees billed. Then here is that 28%. What's the percentage of their total fees billed that your firm will bill clients for outside consultants fees? So outside consultants fees. So we're assuming that outside consultants fees are 28% of our total fees billed. That math is happening automatically too. There's no algebra needed here with the calculator, but if you wanted to see it, it's happening right over here. It's happening automatically for outside consultants. And if you plug in 28%, it's going to automatically do that algebra for you and give you your projected outside consultants fees billed here of $257,709. Next question is, what is your markup, your percentage markup on outside consultants fees? The calculator is assuming 10%. You can plug in whatever you want here, and it's going to give you the markup amount right here of 25,771. So it's 10% of this number up here for your markup. Then we roll into firm expenses, reimbursable expenses. How much will your firm bill clients for your firm's reimbursable expenses is coming right off your annual budget. Plug that in there. How much of your firm will bill for outside consultants' reimbursable expenses, also coming from your annual budget. Plug that in there. You get a total reimbursable expenses number, right? And then what's the markup on your reimbursable expenses? We're assuming 10% for this example. That's giving you a projected markup on reimbursable expenses billed here, and it's giving you a total reimbursable expenses, including the markup of 103,920. Then we get into the debits, right? The debits that we talked about. How much will your firm be billed from outside consultants? The calculator assumes that this, for now, it's assuming that it's the same number, but you can put in the actual amount projected, which may be more than the outside consultants billed. So you just plug that number in here. It will automatically make itself a negative number. It will automatically create it as a debit. Then your project-related expenses. What's the total project-related What is the total projected amount of your project-related expense accounts? This amount is determined by your annual budget. And so you plug that number in right off of your annual budget. It calculates your projected net operating revenue. So it's adding these numbers up here, this number, and debiting these two numbers to give you your projected net operating revenue. Then we roll into expenses, right? That was the next step. How much will your firm pay your total salaries to employees and principals? So your projected direct labor is automatically calculated from above, right? When we did the worksheet, that number came up. Same thing with indirect labor, that's all happening automatically. Then your indirect expenses, your projected indirect expenses coming off of your annual budget, you plug that number in there, and it's giving you your projected total expenses, which automatically calculates your gross profit. It's doing the math for you to give you your gross profit. And then you plug in your miscellaneous revenue here. You plug in your miscellaneous expenses here. It will automatically do the math and give you your total miscellaneous revenue and expenses. It will do the math and give you your net profit loss number. This is your total projected net profit or loss. And it calculates your profit margin of 20% projected profit margin. And at the very bottom, it does a full firm utilization rate of 68.15%. So that's a number that you're trying to keep this number up as high as you can. And so this calculator is taking all of the information that we've developed with the profit plan through Steve's P2P financial management system and plugs it in here as a calculator. Just read the questions, answer the questions, plug in the gray fields, and all the math is done for you. So that's the EntreArchitect Profit Plan Calculator. That's available over at the Profit Guide. You can download that and use it to develop your profit plan. But don't forget, go through the process of going through the entire profit plan spreadsheets through the earlier modules and understand how these numbers are worked out. Don't let the calculator do the work for you. Use the calculator later once you understand it in order to be more efficient, but make sure you understand how these numbers are calculated and what to do and how you do it. And so let's get back to the slides. I'll be right back. So I hope you liked that video. The EntreArchitect Profit Plan Calculator is part of our EntreArchitect Profit course. And again, don't forget, the calculator is available for free download as part of our Profit Tools program. It's a free 3-video training course with 3 financial management calculators for free at entrearchitect.com/profit tools. And don't forget to like this video before you head out, because that will help us, other EntreArchitects, other entrepreneur architects, find this video. Make sure you subscribe so you'll see the next video that comes up. We're going to do a few of these calculator videos. So if you subscribe, you'll make sure that you don't miss any of those. And click the little notification bell. The little notification bell will send you a notification every time we upload a new video. So don't forget to do that. Thanks for hanging out with me here on this video, and we'll Catch you on the next one.